Okay, in the Work Together 5-4, we will be working on establishing a petty cash fund and then replenishing the petty cash fund. Okay, first of all, the problem on page 138, it says that we were going to do the journal entries to establish the petty cash fund on July 3rd. So the fund transaction is paid cash to establish petty cash fund, $250, using check number 57. So to analyze this transaction, we can hear in there that we've paid cash. So automatically when we hear the words paid cash, we know that we're going to be doing a credit to our cash. And then the other piece of that transaction, we know that we're establishing a petty cash fund. We know that our petty cash fund is an asset. So if we're going to be establishing it, we're going to be increasing that asset account. And so we're going to do a debit. So on July 3rd, we're going to do a debit to the petty cash fund. And it says that we did that on check 57, and we're establishing it for $250. And then we're paying out of our cash account in the bank, so we're going to credit our cash account for $250. Now, as we discussed in class when we did the notes, we know that when we establish a petty cash fund, that's the only time we are actually going to really debit our petty cash fund. We know that the petty cash fund, as the balances are used, it's not, we don't do journal entries to that account every time we take money out of that account. One of the purposes of using a petty cash fund is to simplify the process for small dollar amount cash transactions. So we do that in part by just updating those accounts that are affected using our petty cash when we replenish the petty cash fund, either at the end of the month or at a time when the petty cash fund threshold is realized. So if we established a petty cash fund for $250, we might have a replenished threshold when our petty cash balance went down to, say, $50 or $75. So if we kept taking petty cash out of our drawer to pay for like random miscellaneous things, when our balance got down to $50 or $75, we might, even if it wasn't the end of the month, so the minimum would be the end of the month, but we might replenish it at that point in time. And then what we simply do when we go to replenish it is we take all those petty cash slips that we put into our petty cash drawer each time we've taken some money out of that petty cash account. We would take those petty cash slips out of our drawer and use them to help journalize the transactions and bring those other accounts that are affected up to date. So how we would go about that replenishing process is on July 31st. In this particular problem, they decided they were going to replenish the petty cash fund. So what they did is they paid cash. So again, we're going to go to our bank account. We're going to pay cash out of our bank account to replenish the petty cash fund for $78. So the total amount is $78. And the accounts that are going to be affected are the supplies for $25, miscellaneous expenses for $8, and repairs for $45. And we did this on check 97. So what that basically means, if we add up the amounts, for supplies for $25, miscellaneous expense for $8, and repairs for $45, that all adds up to the $78 that we're going to replenish the petty cash fund with. So we have to take that cash out of our bank account, put it back into our petty cash box, and then take those petty cash slips out and journalize those accounts that we now, up until now, don't have any entries for. So technically speaking, those accounts are understated at this point in time. Okay, so we're going to really have to journalize those to bring them up to date and then post them to their ledger balances. So the first one we see that's affected is the supplies account. And we see supplies And we know that we wrote a check number 97, so C97, check 97 to the bank, to ourselves, to get the money out of the bank for $78, but supplies is only affected by $25 because we have a petty cash slip that says we took $25 out of our petty cash fund to pay for supplies. Then we have another one is miscellaneous expense. We used $8 to pay for some miscellaneous items. And then lastly, we see we have repairs. Maybe we had a repairman come in and do some work, and we had to pay him $45, so we just took it out of our petty cash box. And then these all three will total up to the $78, and this is our compound entry. I'm just writing this here to just model that this totals the $78. You wouldn't put anything here in real life in your journal. And then we're going to credit our cash for the $78. Okay, and then we take that $78 and we're putting it right back in the petty cash box. So that would bring our balance for our petty cash back up to $250 because we've taken these out now, and we want to bring it back up and replenish that $250 balance. Okay, and that's all there is to establishing a petty cash fund and then replenishing it. Okay, if you have any questions, feel free anytime to come by and see me. Thanks.